show today, actually. Thank you, Scott. We will talk a lot about that. All right, so yeah, we were just doing a little testing there on the side. I think next week we might start doing some more live broadcasting in addition to this GoToWebinar link. So stay tuned for that. We had kind of a good little test there. Thank you for joining, everybody. I'm joined here with Andy. Hello, Andy. How you doing?
Hey, Steve. Hello, Scott. And hi, everybody.
All right. Yes, happy home quarantine for everybody. I've got 3 adults here, a student and another adult trying to, I mean, we are just paring down the bandwidth in this house, broadcasting, Zoom classes, college students, and it's crazy. So here's the afternoon broadcast from my house, and we're going to talk about the trade of the week, which we normally do. As people file in, we see a good crowd filing in, and again, that's due to, I think, people don't have a whole lot else to do right now, but kind of check in with what's going on in the stock market, because you can't really go out. So let's get started. Just a reminder, we are a software as a subscription company. Got their special license and the authority to charge you a fee for their knowledge. We're not going to charge you a fee for our knowledge, but our knowledge is not to be considered investment advice. So that should make the attorneys happy. Andy and I have been using this product for almost 17 years. We've seen a lot of changes, and we've seen a very powerful program develop out of it. And it's not something you can learn in just a few days' time or even just a month in that respect. A lot of people try that month in a year. We see a lot of that. But the point is we need to give you guys as much time as possible to demonstrate what it is the program does and help you find a way to hone it in for what you want. So we've got right now, we have the live trading room from Barry, hundreds of people in there every day and a handful of great traders taking the lead. It's more or less a day trading room, but nonetheless, Barry makes himself available to learn the program and asks us to send people there all the time. If they need a question, they can get it answered and visually demonstrated in Barry's room. So we have that. We also have the live 12 p.m., call it noon p.m. Eastern, 1 hour YouTube stream where we take over. And that's what we were just testing now to try and do the same thing here on these Tuesday trade of the weeks. Just in case some people have a hard time maybe getting the email to their GoToWebinar or can't find it, you can just use the YouTube stream as a backup. You can also email it to your friends if they're not in our playlist, and we can increase the YouTube audience that way. So that'll be starting probably soon. But back to our way of helping you guys get the learning curve shortened. We have that daily support session, and then we also have what we call TI University. This is the daily support session slide, 12 p.m. Eastern, as I said, on YouTube. And we also have what we call TI University. If you need help and you want a of education, starting with the basic stuff, and then take it as long as you want into day 4 with cool back testing and optimization to help really refine maybe some of the custom strategies you're trying to create, that's the way to go. So you can email us at info@trade-ideas.com. We can help get you in the right direction on that playlist. So here we are, man and machine combined. You know, I'd like to talk again this week a little bit more about some real world experiences. You know, we've got a lot of data that we can parse through and look at, but sometimes, you know, let's be honest, looking at these giant trees of data and going back in time and trying to make sense of it, it can be a bit real world experiences. Primarily, we'll talk a bit more about it, but you know, the fund, that small fund, it's a small test account. Let's call it what it is. Testing our brokerage plus module. Many months ago, we started off day trading it, and then we realized that we shouldn't be day trading this. We should be doing what our strength is, and our strength is definitely swing trading. So I've got some data and some cool stuff to show you, and then maybe some wisdom to try and impart as to how well we've been doing and why we've been doing so well. It has a lot to do with the exits, but we'll talk a lot more about that. But it really is an interesting little, and I know Andy will agree with me, it's a fascinating little study. We have 4 people that have diced up a live account to test, and it's turning into just a boffo amazing return, because what's happening is we got 4 guys that aren't group thinking, 4 guys that are all kind of doing their own thing, and every now and then one guy might head to the other guy, and this guy might reach out and get the right one, and that guy might be in a slump, but this guy's doing better. It's performing amazingly well. I don't know what the future holds for this type of mandate and this type of trading, Andy, but we'll see. We're going to talk a little bit about how we've been doing in that, and more importantly, the value to instill is start by looking at the market recap. Feels like we might be stalling. I'll kind of improve on what we talked about in Jamie's webinar yesterday. Some AI trades today. If you're a new trader and you don't know what to trade, get the premium account and follow the AI for 1 month. Some of the tactics we're going to talk about later is good for managing the trades, but the human element but the machine element that I just mentioned is the AI. If you don't know what to scan for, if you're brand new, you don't know what to do, the AI is serving up some really interesting entry ideas, and we say it all the time. The value is certainly in the entries, not the exits. We are better at the exits than the AI, but we're not as good as the AI is filtering through the giant data hose, fire hose that is of 8,000 symbols every day, trying to figure out which one do we pick and when do we buy it. The AI is much better at that. So, symbiotic relationship, man and machine. We'll just keep pounding into that. The trade of the week, which this webinar is named after, is in active, and it says silver mining stock. We'll talk about that, and we'll check into last week's as well and see how we can manage those a little better, assuming the market holds up. And then here we go. We're going to talk about, as I said, how are you taking profits on your winning trades? This is something I think that we've been really doing well in the account, and we'll show some demonstrations or some examples just to get the keys. Are you getting out of your winning trades on a stop loss, the trailing stops? You just keep moving that trailing stop up, and then, okay, you got me. Or are you putting that target up there and letting the market come up and tag you at a level that makes sense? You'd be surprised. So we'll talk about that. And then I think we'll finish off with a sector check. I don't know if there's any alerts we can set. I've got one scan we'll take a look at. Started with that. I like to start with the SPY as usual. Very unlikely if this is the low and that's it, and it was the bottom. They're laying in wait, as smart traders would do, laying in wait until the plane starts to buff it. The volume declines, hits a significant wall, and what do you know? We had Friday kind of a close right on that line, but a pretty good reversal and rejection yesterday. What I'd said yesterday was the closing price is what is put in the books and some bidders, but here's what happened. The sellers are going home tonight pretty darn confident here and added their shorts and maybe add a close. So this could be the beginnings about back and forth. And we respect him very much as a tech bottom, but they have double bottoms, as they say, and then we can move higher from that. So we'll see. I don't know what the bad news. Be very cautious about, especially taking new longs right now. Maybe even taking profits on some ones that you have. But let's look at the Nifty. Well, today is a different story. Today it actually came down a kick, but it too also closed below. We'd like to see the very first pattern that, and he said, Steve, I said, Dan, I want to see, so right there, gap up retracement, as you can kind of see that icon tries to attribute what I'm showing you right here. There's the gap, there's the coming in, and then there's the move to new highs. What this is showing us is that the sellers tried to grab a hold of a gap up and the sellers failed as the price went to new highs. That used to be back in the day a really nice money trade, but at least gives us a direction. So knowing that the spiders were looking a little weak, I like to use the SDS as a vehicle because it's a double. I just now have a little bit of some more stuff running. Yeah, our RJ, the VIX is definitely running as well. Good thing. 50 also closed below. Note, the only control that we have over our 401ks here at this company or in general is to be able to go in and direct some money around, allocate money to bonds and then bonds. But what I'm seeing here now, I can't help not wanting to be in control. Andy does the same thing. So that's kind of what I feel like. I'm kind of putting, my money where I think my opinions are lying. So we'll see what happens. Anything you want to add to the market recap, Andy?
No, I agree with everything you said. I am watching oil closely just
Yes.
because
We haven't even
I
talked
think
about
if
that.
you have a collapse in that major sector, it could be catastrophic. So, you know, yeah, it's pretty ugly. So we need it. If you're bullish, you'd like to see that bounce
Andy, let's share
at
with
some
them
point.
let's share with them a bad trade today, because it's what we talked about last week. Remember the 15-minute rule? You know, we tried to buy some oil and hold overnight. We didn't get what we want.
Right.
But what happened this morning? Our stop was probably right about here. And it's no fun when the market opens up down here and
Yep.
it's beyond your risk. So it's exactly what we talked about last week. What do you do when you have the catastrophic gap that pushes through your risk one level? Well, we put it in play today. Good job of just kind of watching, grinding your teeth, and we're hoping. But there's our first candle. If you can see that green candle, that is our signal candle. So what happens after that? Once your signal candle, which is the first 15-minute candles in place, you place your stop at the low of that candle. If the stock is going to recover, it's going to do it like that. If it ain't going to recover, you're going to save yourself a lot of headache. So you can see there
Yes,
was
you
a
don't you
good
don't
amount of
want to
headache.
you don't want to sit in there and hope, you know.
Don't fight that.
Yeah,
But you know,
don't fight it.
and it's the worst feeling in the world, as we even delved into last week. You know, when you do let the market open, bell rings, and bing, you're out, and you watch the thing just trade higher. So
Mm-hmm.
more often than not, Michael's actually looked at the data. If you just sit through and just grind, you know, grin and bear it and hold on tight and let that first candle define itself, you can make better decision processes. So there's
Exactly.
what I was trying to say earlier. We're trying to help bring some more real world trading scenarios into the webinar to help people, because there's a lot of new people coming in trying to figure out how to make sense of all this.
Sure.
All right.
All
You want
right.
to take it over for a minute?
Yeah, for sure. Let me grab it. And kind of really a nice day by Holly. A really nice day. I was really proud of the fact that only a handful of trades, only 5 trades today. You can see Holly AI made 0. All 5 came from Holly 2.0. And Neo, which is very rare, but I think there was some data provider issues today in Neo. But that's okay. We had we had 5 trades, and they were 5 good trades. You're not seeing any red in these trades. 3 shorts and 2 longs. If you look over here at the totals and the channel bar, you're going to see a number of $452. That's if you placed 100, if you bought 100 shares of every alert. That is what the total is going to be. Bear with me, the guys who are very familiar with Holly and knows how it works. There's a lot of people in here that's in here for the first time, so I'm just kind of explaining to them, because you're going to see my totals I'm sorry, I'm on a foreign computer here, so I don't have my Epic pen with me today, but if you'll look right here in the moderate profit, you're going to see it's $1,411, and you're probably asking why the disparity. Well, it's going to be because if you go to tools and options, we have the options of changing our trade size. So, and what I've done here is I placed the trade size at $200 risk based on the stop loss. All right, so every trade, if we look at FLIR this morning, the big winner, you can see it came up here, the signal was fired right here, and the stop loss was only about 75 cents higher. Okay, and so based upon my $200 maximum risk, okay, if the price goes back to the stop price, the most I'm going to lose is $200. So what the system does, it goes out and buys the exact number of shares that calculates to that $200 stop. So so you can see versus the 100 shares that you find in Holly 2.0, you see I have a variety of shares, and it's all based upon my $200 risk based on stop loss. So I hope that makes sense for everybody. And I like to set my entry time up sorted by time. So what's happening here as each trade comes through, you can see this was the first one this morning. Okay, it would have been the only one on the strategy trades window at one time, and they just populate as each one is fired off according to time. So you'll always have your most recent on top, which is kind of, I don't know, I like that method. So you could actually sort by conservative profit, but then a new trade may come in there, and you're gonna, if we have 10 or 15 in here, you may have a hard time finding it. But real quickly, wow, great day, all winning trades. Let's take a look at them real quick. PWR, you can see this was a strategy called Bond Shorty, which is looking for a continuation to the downside, and we definitely got it, and it's PWR this morning. Okay. DEI, not a big mover here at all, but nonetheless, a no pain trade, all right, which means it never really went against you, never went above. It's a short, so the price never went above the entry, which is always nice. No pain, and that one wasn't a big one. Here's the really nice one this morning was FLIR. And what a contrarian move. This is the kind of price action that you can get in a bear market. Let's face it, I'm not going to call it anything other than a bear market, what it is. And we had a big gap up, probably news this morning, because you can see earnings are not till May 1st over here in my single stock window. And ran up this morning, started to show weakness. We had kind of a dark cloud cover on the 15-minute, which means this candle basically engulfed that candle. So a bearish engulfing pattern, if you will, and then we got the signal, and really, once again, a no pain trade, and just pretty much bled all afternoon. So if you would have held it according to my risk parameters, you can see here in moderate profit, let me expand that for you a little bit, you would have made $624.75 on this trade based upon a position of 267 shares. So very, very nicely done there. Now, if you're confused, like you may be asking, what is this column right here, this conservative? You got conservative and moderate. Conservative means, okay, if you take Holly's exit. So she has 5 reasons to take an exit. One is timed exit, which means she's optimized for time. And let's say it goes for 60 minutes and it exits, and you get what's called a time exit. So these two optimized in time, closed out in timed exit. We also have profit save, which means after a certain percentage, let's take a look at this AAWW, which is one of the close. After you get a certain percentage of profits, what will happen is an algorithm will kick in that if you get a pullback of a certain percentage, it will go ahead and exit on a reason called profit save. In other words, we do not want to get good profits and have this thing turn around and go negative on us. Same thing for Bond Shorty, exit for profit save, and FLIR was a target hit, okay? So if you took all those exits with Holly, you would have what's called conservative profit, which wasn't bad, but we are learning, guys, okay, that if you hold these trades until the close, and it's amazing, we have data on this, in most, vast majority of cases, you're gonna find yourself do much better by holding them to the close. So some great trades today. You had 2 longs and 3 shorts, and they were all winners. Take a look. The only one we haven't looked at is eBay, and this was from a strategy called on support. And our buy signal is in the way a little bit, but what we see here on the intraday, if I scroll it back, is it came down to yesterday's lows, and the signal was on support, triggered, nowhere near the stop, and had a little nice bounce there. Nothing to write home about, but still a profitable trade. So good day for Holly, Steve. Unless you do have something to add, I'm going to kick it back to you.
No, just new traders, let Holly give you the entry and use the 10-period moving average on a 15-minute chart to manage the trade, and you got yourself man and machine, human and machine.
Yep,
sure,
exactly. All right.
All right, so it's time to talk about the trade of the week. Real quickly, this over here, this is the My Heart list. You can go to the channel bar. On this channel, there's a top list that's essentially this thing right here, and all it does is turns on. If you click on the heart on a chart, it drops that symbol into this watch list. So every day, these are the watch lists. This is last week's trade of the week. We'll get to that in a second. So everything on here kind of is in my wheelhouse, and it's a good way to just kind of keep tabs of things throughout the day. what I had said in the email was that, if we look at the Qs and the NASDAQ last week, we had a pretty nice run. A lot of things were running out of steam up here in both the S&P and the NASDAQ, right at that 50. It's not like we really wanted to jump in and go long at this critical level that we were identifying earlier. So the only thing I really noticed at the time was the GDXs were going sideways, sideways, sideways. And I tell you what, they sure closed interesting today. Look at that, Andy. We might even got our touch there. Our OCD algorithmic touch, where they lean down like you're on a ladder and you're looking for that first step, you're dangling your foot and you feel it. That's what the algos do sometimes on that 10-period moving average. Maybe that's the precursor for a nice, trampoline bounce higher. We'll see. But going into the weekend, this is what I saw. And so the backdrop of the gold miners really seemed to have the best chance. And one that we've been watching and kind of stalking a lot along the way and trading in our own account too is Pan American Silver. Back here during this big run before the craziness. I mean, this is really nothing more than a volatility of what we just have. Pan American Silver was in tremendous demand. Tons of options, buyers and sweepers. I saw every day the Nigerian brothers were always all over this on the options market. But forget that. Let's just look at am I projecting anything? I only see trade of the week. Bernardo, yeah, I'm still projecting. Your internet might be slow. I'm sorry. Looking at the daily chart here of Pan American Silver, without our moving averages, it just looks nice and clean. It's just going sideways. That green line was our trigger line. We got a bit of a premature trigger, but boy, did it recover nicely today. What I thought I might do is just kind of quickly walk us through. I'm going to zoom in, and then I'm going to walk through. Okay, so here was yesterday on the open. That green line again was our trigger. Pause opened up, threatened but didn't, pulled back. Okay, that's fine. Went to a new low here, another little new low, kind of tapped that and then started to rise, got above our moving average, got a hold of it. And then there's our trigger. Okay, we're in the trade. So manage it accordingly. Start using this moving average here to see where are we in relation to that. Hey, look at that, very good. This is the kind of action we want to see. And then, okay, we're going to run out of buyers here a little bit. Okay, we're going to consolidate. What do you know? Wow, look at that. We bounced right off that moving average, just like I always like. And then basically, we didn't. Now this was roughly back to our moving average. I'm sorry, our entry point, and then some craziness, and then into today. So here's where it closed yesterday. Closed back up. We basically regained our little intraday moving average yesterday. When something opens like this down here, and the very first tick is up, and then the very next tick is up, and so on and so forth, this is probably one of the strongest indicators, or one of the most strongest examples of price action you can see. Would you agree, Andy, when you see that?
Oh, yeah. Oh, absolutely.
The market basically said this thing had no business gapping down at that price, and we'll take it from here. Thank you very much. So when you see that, and my first thought this morning, okay, that's exactly what I wanted to see. Let's take our eyes off pause. No harm, no foul. Even though it gapped below yesterday there, that little mid-range, it fell right back in line, popped right back up to yesterday's close, and then just kind of slopped around for a little while. Rode that moving average for a little bit, threatened it, and basically closed at or above it. And look, we are trading basically above it after hours. So I just wanted to go through a little tick by tick movement on, and to really highlight how it opened this morning. Look at how dastardly that was. It really took out everything and then just got right back. Didn't even down tick once. But what we're focused on for this trade is, where are we here? Boy, we are riding the top side of this 50 period, something the other stocks are certainly not doing. And sideways action is always perfect. It's also above the 200-day. And we've got the 10-day coming up to meet it. There's a lot of rivers verging here. I'm going to look for a big day tomorrow. I'm just going to go out and say it. I expect a big day tomorrow from pause. Let's hope. I saw a question from Glenn. Maybe when a trade triggers, does the stop loss apply to only regular trading hours, or good question, Glenn. No, I'd like to see pre-market. I'm sorry, I'd like to see live trading. As Andy answered correctly, we're on the same page. I would like to discount pre-market and kind of even do what we talked about. Let the thing open and see what that first 15-minute candle is able to do for you.
Okay,
Good.
I didn't know if he was talking about the AI or the TOW. Okay, he was talking
TOW.
about the TOW, I guess.
TOW. Okay. Yeah, so we'd like to let that first candle shape up, Glenn, and then key off of that. If we're scared, that first candle, that low might be the way to get out. So there, I think we're alive and well. I think tomorrow could be a good day. We'll see in Pan Am Silver. Last week was Virtue, has a great story. This is the market making company, market making whatever, data farm, we'll call it a data farm. They're holding up well. It closed below that simple moving average yesterday, but I'm still in it, as indicated by it's on here. Reclaim the moving average today. And in reality, I think the trade actually called for watching a close below this. I call this the second backstop sometimes. I'll give this one a little bit of leeway if the chart looks really good. Sideways is great to me, so it's really just nitpicking of where it closed. But I want to see that red line, that 10, that 20 period. I certainly want to see that close. Will you tell us what indicators? Yeah, Andy answered that. Using the 10 period moving average, the 20, the 50, and also I've got the 200 here.
Yeah,
now on the daily chart, in the intraday chart, my most interesting line of all is the 10 period moving average. I find that one the most interesting. And quickly, just last 2 weeks ago, State Street was our trade of the week. It came out of this little nice consolidation here. Look at that, slammed right into the 50, couldn't get above. Just like so many other stocks, they're really rolling over at their respective 50 moving averages, and we don't like that. All right, so 3 quick recaps. If anybody has any other questions, simple, always simple, William. We like to keep it simple here, simple moving averages. If there's any other questions on the trade of the week in Pan Am, we'll take a look at it.
By the way, Steve, did you notice the washout bounce in the Piton today?
Yes, I did. I got out yesterday. Got me out yesterday. Why did it get me out yesterday, everybody? Because it closed horribly below the 50. It just looked like a bleh. And washout bounce, basically. It wasn't quite on the open per se, but it did do it. All right, so moving along here. Again, if anybody has any questions on the trade of the week, which is our focus here, beautiful, moving sideways, just mirroring the GDX, which, by the way, GDX I am long of in the fund, which I want to show you something here by way of what's called Nugget. It's a 3 times, if I zoom in, it makes a little more sense. So if GDX moves 4%, Nugget is going to move 12%. Is it possible to add RSI and stochastic? Yes, you can. You can add indicators. We've got RSI. We do not have stochastic yet.
Right.
It may come in the future, but those are your options there, Patrick. All right, so talked a little bit about that fund that Andy and I and Michael and Jamie are trading. It's really amazing how 4 different minds can come together and make a fund perform well. And when I say perform well, I think it's time to do a little humble bragging here. We're going to go ahead and do it. This was put together by Michael, and this is our performance since January, the beginning of the year. And these are your NASDAQ and S&P and Dow and some of the other ETF tracking indexes. We can kind of see here's where everything fell out of bed late February. Well, boy, we sure navigated that perfectly. None of us were really caught long. We actually did a really nice job of giving ourselves some separation. I tell you what, you can look at a lot of prospectuses out there, and I bet you're not going to see very many that have that kind of separation between account value and what the other market was doing. So big pat on our back for doing that. And we've continued to have a nice trajectory. And I'm showing you this because I want to show you that what we're doing is working. And we're doing many things that are working, primarily focus on swing trading. But one of the things that we're all kind of really getting good at is how do we take our exits? And I want to kind of ponder that for a minute. Just some more data here real quick. You know, this particular value, VAMI, Michael explained to me, this is from Interactive Brokers, by the way. If you have an Interactive Brokerage account, you can pull the same reports. We moved out and blacked out the account there. But what this means is what happens if you had started with $1,000? Well, the S&P go down to 880. Well, our account would have turned $1,000 into 1,600. So yeah, we're up roughly about 60%, which is pretty amazing.
And what was the date range from that, Steve?
January 1st to yesterday.
Okay.
Yeah. Some of the
Okay.
things that hedge funds care about, Sharpe ratio, they want to see a Sharpe ratio above 2, which means how much are you risking to actually make that profit you just made? Did we have to sit through a crazy drawdown and all the investors, just basically had to change their diapers watching you guys trade? Anything above 2 is going to be very smooth and consistent. You're not going to have a lot of drawdowns and a lot of crazy. Well, we got a Sharpe ratio of 5, which is really, really impressive. So, yeah, that's what we're doing over there. Stocks, we're playing ETFs as well, a lot of ETFs. So one of the ways in which we've been able to achieve that kind of performance is taking profits when we can, not when we have to. I'm going to use maybe X as an example on this day chart, and we'll look at a few more. I remember this day right here, and I remember looking, and here's the premise right here. When you buy a stock and you're a swing trader, and you're like, all right, I really like this, you got to immediately start looking, well, what's my target? Well, this thing is looming, but boy, if I could fill this gap up here, I'd sure take that. And I remember the day, look at this stock, it spiked up, and the point is I was selling half right there. And when you put a limit order out to sell based on something that you're looking on the daily chart, and you get it, you should be darn happy you got it, because your plan just worked out. More often than not, you're going to miss that opportunity if you don't have that order sitting out ahead of time. But let's say on this day that you were writing it and you said, well, I'm just going to wait until it closes below that moving average that Steve always talks about. Let's see if we can find that day actually.
Oh gosh, it's going to be
what?
hard.
It's going to be hard.
Oh,
Yeah.
go ahead.
Here we go. There it is. There's the day,
Nice.
right there. So, guys, start thinking about trade after trade after trade after trade and how they start to add up. All right. We've talked about your entry being important. Great. Well, now we're going to talk about how important is your exit. What type of exit player are you? And I'm just trying to say, if you can force yourself to look at that daily chart and say, boy, I sure would be happy to get that price, I'm going to go ahead and throw that order out there. It was right about there on that day. I think it was right just above 7. It might have been 7 exactly. Actually, I remember the order, Andy. It was $6.99. I said,
Okay.
I'll take it on sale. I'll take it at $6.99. And that corresponded to something significant on the daily chart here. There it is right there, roughly, filling that gap. Perfect. I'm going to mark that up. So we're anticipating taking profits. The reason that's hard to do is because we have a greed factor involved in our psyche. And a lot of times our greed factor says, I'm going to milk this thing as long as I can get it, because I just can't stand if I get out too soon to watch this thing go higher. Well, that might happen sometimes, but that's why I only sold half. What other people might do is they'll say, I'm going to wait until it closes below that moving average. Well, there's a good, 30 cents on a $7 stock. If you're constantly, times 12 over the course of a week or so, or 2 weeks, taking profits at this level versus trying to be greedy and then saying, oh, all right, I'll take my profit here. It's basically selling when you can, which is up here, when everybody's reaching up. And you remember when we were trading, day trading, and we'd throw an offer out, and we'd say, whoop, well, that went fast. It was like holding a Kleenex in the wind in a car with the window open going 90 miles an hour. It's like, I think I may have just sold too soon. So we'd kind of gauge the feeling of what was out there, with very small size, by the way. But same kind of thing. If you can just get your price, everybody else wants what you have. At this moment in time, everybody wants what you have, and you can get your price. At this moment in time, everybody's selling because they have to. So if you can sell when you can, as opposed to when you have to, the point is, it's going to start to really add up at the end of the month, and you're going to start to improve your profit and loss statement. This is something that we've been doing, and it's it's definitely paying dividends. So that's a classic example right there. A real world example. I like to think of some other. I did it in Piton. I remember I got half off in Piton, but I didn't get I didn't get all of it off. So I wound up having to get out of the second half when I had to. But at least I gave it a good shot and had a target out here. I remember what it was. It was this, matter of fact, this is what you do. You come in here and you say, I would be really happy if I could get this level right here. So I'm just going to turn that orange line into a good till canceled limit sell order for half or a third. If you start getting in that habit and taking profits when you can, when you have what everybody else wants, rather than when you have to run to the exits and compete with everybody else because everybody was too greedy and now it's super obvious to everybody. That's the whole point, is trying to run against the herd. Sell when it's not obvious, because it's hard to hold on. We all have that greed factor. So that was kind of the sermon of the whole thing, is to just analyze. We can talk about many different facets of how you trade, but entries are certainly one of them. I talked about contrarian matter of fact, it just hit me. I mean, I've talked about contrarian exits, using that bird in the hand type of scan that I have here, using that minor contrarian low on a chart that looks pretty decent. That's an entry that's contrarian. It's the same thing that we're doing and I'm talking about here on your exit. Those are contrarian exits. When you see the price start to separate so much, let's use oil as an example this morning. Let's say you were short oil. Let's say you were short oil on the open, right? When you saw it, this is the reverse horseshoe I just showed you. The gap down, try to fill the gap and roll over. Well, it's the same thing in inverse, what I was talking about at the beginning. Let's say you sold this level right here. You're watching. You sell a little bit of piece right here, new lows. You sell a little bit right here, and you're selling at those. You're covering at those levels because you're at a tremendous distance from this moving average. It's just a matter of time before the price comes back. So the person that may have taken profits a couple of times here on the short sell versus the person that waited to be greedy, well, that person didn't get out probably until back up here. So again, there's an example on the short side of covering, taking your profits when you can. And when is that? Well, I would say it's when the price starts to really separate from this 10-period moving average. If you're thinking about taking a profit, that's the time to do it. All right, anything you want to add to all that I just spewed? Andy? You're on mute, I think you're on something.
Yeah, I'm sorry about that. No, I totally agree with you, and we're all good about doing that, you know. And like you said, with that piton, it's okay. It's okay if you end up getting out of the second half for a flat.
Yeah.
At least you're not getting out of the whole trade for a flat after seeing all those profits. That's what you want to avoid.
Mm-hmm.
And no, you covered that very well.
All right, so hopefully that made some sense. I've made a mess of my layout as I do. I start getting excited looking at charts. Question, good question. Indexes like USO or SPY, which signals do you follow to see if it will go upwards or downwards? Well, I use many different reasons for maybe an entry or exit, probably too many to even discuss here as to maybe why you'd get in. It's just a matter of how the chart looks, but what I can give you an answer is what we were just talking about. This simple moving average, it works wonders on the intraday charts. If you're looking at USO this morning, you were repelled by that moving average. It just threw the price back to lows. And so I used the 10-period simple moving average on a 15-minute chart to gauge the momentum. Is the momentum still in play? Stay in the trade. Has the momentum broken? Right here, it closed back above that declining line, get out. And it's about as simple as you can make it. That's about the best way I can answer. At the beginning of the day, I mean, it doesn't really matter what time of day. I could say this, Bernardo, at the beginning of the day, I'm interested in things that have spiked down and taken out yesterday's lows and then are popping right back up and getting ready to go positive. That to me signals a HFT or an algorithm stop hunt. They washed out all the good till canceled stops right on the open, which is when they typically do it. And then if they start moving higher with a strong bid, that can be a very interesting tell for any ETF or any stock for that matter. All right, you know, I'm gonna forego the sectors. They all kind of look bad. They're 50 and back underneath it and look like they might want to roll over. Basically what the backdrop of our market looks like.
Mm-hmm.
What is Mike saying? I get a Peloton down. Yeah. My new knee would love that, actually. I need to do that. So let's look at a few of these here, and we'll start to, there you go, right off the bat. There's a stock that bounced right up in 2 days, tried, and just got caught in the net of the declining 50. I'm not going to set any alerts today for you guys. You're welcome to do these yourself. So APPS, you know, if you're looking at something like this, that little wick right there that was today's low, well, if it takes that out tomorrow, that's probably where I would put that alert, something like that. Mm-hmm. Let's look at Bill. What is Bill? Yeah, I like to look at the software publishers, the average volume. But again, these are things that are getting caught up in its 50-period moving average. This one could go either way. I'm not exactly excited about that one. Beyond, oh, this is the Beyond Meat. Oh, geez. Mm-hmm. That one could make a case for that. But again, these are all stocks that are being caught up at or close to their 50. What is this? Technical petroleum refiners. That looks really nasty. I'd probably do something like this right here. Set an alert like that to go short if it broke that line. I'll share this scan with you guys too. I'm sure somebody's probably thinking they could have that. Yeah. All right, I think we're running into the end here. So let me just share this alert as promised, and we'll go ahead and bring Scott back here in a minute. We'll drop this into the chat window for you guys. We'll call it the 50 pullback, even though it's not what it's called. There you go. All right, well, let me bring the slideshow back up. Thanks for tuning in, guys. If you catch the replay, if you missed the early parts, of course, but we'll bring Scott in for some final announcements, and I'll talk to you next time.
Great, sounds good. Thanks, everyone. We do have a new ebook that's out, so that's something you should be aware of on our way out of the webinar. Go to trade-ideas.com/earnings. The book is all about how to make earnings season work to your advantage, and it's got a few strategies for you to add to your layout with Cloud Links. It's a good read. It's written by the guy that created Holly and the odds maker and all that, a bunch of other important parts of our software. There's a podcast. Go ahead and search for that wherever you listen to your podcast. You search for Trade Ideas Podcast, add us, and you'll be ready to get the next episode. Check out the interviews that we posted at the top of the year. There's some good ones in there. Check those out. Go to tradeIdeas.com/price and use April showers to save 15% for the remainder of the month off any subscription or the Brokerage Plus lifetime license. Those of you that are standard subscribers can also use this to upgrade to premium. If you have any questions at all, shoot an email to info@trade-ideas.com. That is the best way to reach our support staff. It goes into the help desk software, so it doesn't get lost, and it gets an appropriate reply from the best team member to answer your question. You can follow Steve on Twitter at TodayTrader. Also follow at Trade Ideas, at QuantBot. There's some other handles that you'll find. If you follow one, you'll see the others. Facebook.com/TradeIdeasPro is the Facebook page to like and share everything you see with your friends. Thanks, Steve. Thanks, Andy. We'll have the recording up later on tonight or tomorrow morning, and you will get a reminder email from GoToWebinar tomorrow with a link on how to find it. Thanks, guys.
All right, see you next time.
Thanks, everybody. I'll see you on Thursday.